The times when banks are considered the safest place to keep your cash are gone. While banks still provide stability and security for depositors, there are now several factors that have contributed to the changing landscape of financial security. Recent incidents of hacking, data breaches, the consistent bank charges and fees, and identity theft have exposed vulnerabilities within the banking system. And let's not forget the potential inconvenience when the bank fails or limits our access to our funds during uncertain times. It may question whether the banks we trust implicitly are truly the safest option for our hard-earned cash. Don't get me wrong, I know holding your cash is also not the smartest thing to do, as it is a physical asset that is prone to loss or theft. Also, holding cash for the long term might mean missing out on potential investment opportunities that could generate higher returns. Despite the physical control and immediate access holding your cash gives you, and the convenience and security, no matter how minimal, that keeping your cash in the bank could also provide, there are better alternatives to consider that they do not just provide security. They make your money work for you. They offer safety and potential growth. They elevate your finances. Here are a few. Number 1, Treasury securities. For example, the U.S. Treasury securities such as Treasury bills, notes, and bonds are considered one of the safest investment options. They are backed by the U.S. government and can be purchased directly from the U.S. Department of Treasury. While they are not as easily accessible as cash in a bank account, they provide a secure way to store your funds and potentially earn interest. Number 2, another example is diversified investments. Instead of keeping large amounts of cash, it is financially wise to diversify investments across different asset classes, such as stocks, bonds, real estate, or precious metals like gold or silver. Diverse investments helps spread the risk and it potentially provides better returns over time. But I need to remind you that investing involves risks and that it's important to carefully research and understand each investment option before committing your funds into it. Number 3, there are also digital payment platforms that safeguard our wealth while still maintaining control. The rise of digital technologies and fintech innovations has introduced new possibilities for managing and securing money. Online banking, mobile payment apps, and digital wallets offer convenient alternatives to traditional banking services. But you must wonder for the safety of your funds in these platforms. These platforms have even better security measures with encryption and fraud protection, and you can use most of them to invest digitally. It's important to access your specific needs, risk tolerance, and conduct proper research. Will it be okay to lock your money away in an investment for the long term and you won't be needing it anytime soon? Do you need to make a lot of transactions consistently, and heading to the bank every time wouldn't be an option? Well, these are your options. Hit the like and subscribe button to get more financial advice and contents every week. So, tell me, which do you consider safer and better? Your money in a bank account, sitting, waiting for you and depreciating in value over time due to inflation, or your money safely locked into an investment and not just sitting there but making you more money?